Hi everyone, I'm Ed Greenspon, and I'm delighted to be speaking today with two guests who bring deep experience and expertise to some of the central questions in Canada's moment of economic renewal. How do we attract investment capital, and what role could the tax system play? As you know, we are calling these episodes of Full Circle the Leapfrog series. We are at a moment in the story of this nation where people are galvanized to take action on behalf of a more sovereign and successful Canada. The proverbial boiling frog is poised to leap out of its pod if we give it a chance. Leapfrogging, of course, is active. It's forward-looking. It forces us to focus and to get things done. That appeals to me, and I know it appeals to our guests. They are Dominic Barton, chair of Rio Tinto, the world's second largest mining company, which operates in 35 countries, including big holdings in Canada. Dominic is, among other things, Canada's former ambassador to China, and he chaired Canada's Advisory Council on Economic Growth from 2016 to 2018. The Growth Council was ahead of the curve in its calls for bold reforms and to drive productivity and long-term prosperity. And Rob Jeffery, national tax policy leader at Deloitte. He works every day with business leaders navigating the real-world complexity out there of our current system and has a clear view on what's working, what isn't, and what needs to change. Investment and tax, that's what we're going to be talking about today, and if you don't get those right, you don't get productivity, innovation, and competitiveness right either. They are necessary preconditions for the kind of nation building a Leapfrog Canada has within its grasp. So let's get at it. I am delighted to have both of you on the podcast today.
It's great to be with you, Ed, and also to be with Rob.
Great to be here as well. Very much looking forward to our conversation.
Excellent. Well, Dominic, I'm going to start with you. You recently described yourself as and I quote, a frightened optimist. Walk us through what that means and how it relates to the current state of the world and the situation Canada finds itself in.
Well, yeah, I'm a frightened optimist because I believe when I think about Canada and the world, there's a lot of growth that's there. There's a lot of opportunity. The challenge is, of course, the geopolitics and underlying changes within countries and so forth, income inequality and so forth, which is leading to significant disruption. So I feel like we're between two equilibria, if you will, moving from one to another. We all kind of have our views of where it might go, but I think so that's why I'm frightened, because a lot of orthodoxies or beliefs that I've had earlier in my career are being challenged. Free trade, global economic security. There's a whole range of things that are being challenged, and that makes me nervous. But I think in times like this, that's actually opportunity. That's why, again, I'm a frightened optimist.
Yeah, I think you recently said something about leaders of the current generation in corporate boardrooms, et cetera, grew up in an era that the market had taken everything over. Now industrial policy's back and the stage is back. And I guess that's part of the novelty that, is off-putting for people, right?
Yeah. I mean, I started my business career in 1986. 1992, George Soros took on the Bank of England and won. A hedge fund trader beat a central bank. That, in my view, is peak capitalism. Nation states were not that important. You obeyed the capital market. We're in a totally different world now. Capital markets still matter, but nation states matter a lot more. Where trade is going to occur, protectionism, there's a whole range of the industrial policy. Industrial policy was seen as that was the wrong thing to do 10 to 15 years ago. Now the number of countries that are actually pursuing industrial policy, it's the majority, including the United States. So it's a different world, but we just got to figure out how to navigate through it. And I think as Canada, it is an opportunity. That's why I love your leapfrog notion. We have so much. It's up to us to actually unleash it.
How do you see Canada's position now? Or are you frightened? I know you're not a frightened pessimist, because that would just be too much to manage and to go on day after day. But how are you feeling?
Yeah, I suppose I'm fundamentally an optimist. I'm a glass half full kind of guy. I think that what's been interesting for me to see, at least from a tax perspective, is that things tend to go in waves, and things that you might have seen decades ago seem to come back in vogue. they get revisited. And so what I find interesting is that when you look at the challenges that Canada is facing today, we can actually look back at the past and see how we faced other, not identical, but similar economic challenges. How do the country choose to respond? How do they go about making the necessary changes? And we've certainly seen times in our history when meaningful tax changes took place that had tremendous long-term benefits for the country in terms of its like economic structure. And I'm very hopeful and like optimistic that we'll see a similar opportunity in the coming months and years to really be able to try to harness this moment, take advantage of it, and really set Canada on the right path for the next decade or so, and obviously decades to come.
Well, in a few moments, we're going to get into some of those specifics because I think they are interesting and instructive. Dominic, you're chair of one of the world's major companies and certainly major mining and metals companies, considerable holdings in Canada in iron ore, titanium, aluminum, diamonds. How is the geopolitical turmoil that you talk about affecting the investment decisions that you make? How do you invest in this climate?
Well, it's quite challenging to invest in the climate because the rules seem to be changing. When you think about tariffs, you think about the geopolitics and where your supply chains can operate. That's all changing. That said, there's an underlying other force there that makes me again very optimistic, which is we're in the early stages of an energy transition, and that is going to be the single largest in human history capital reallocation we've seen, in the order of $10 trillion a year as we electrify. You need metals to do that. You need copper, you need aluminum, you need iron ore, you need lithium. So the underlying trend, if you will, is very positive because we don't have enough of those resources. I think that what's going to happen with the geopolitics moving on is actually going to make it even more the case because there'll be less free flow of goods. Everyone's going to have their pot, if you will. So you're going to need even more of where it is. The challenge is how you operate as a multinational in that world. China's our largest market, as it is for the other top mining companies in the world. Well over 50% of the revenue is coming from that area. The materials are where the materials are. You can't sort of mine for copper in Switzerland because it's not there. It's in challenging places. So where the material is versus where the demand is defined by geology, which makes it complicated. But a bit back to Rob's point, I look at history. Rio Tinto is 150 years old. You know, it's gone through World War I, it's gone through World War II. It was very interesting in the late 1870s, the British government, the reason Rio Tinto got into Africa was to get ahead of the United States in terms of some critical mineral resources. It was a sort of the US was the challenger. So I think we've just got to look at that history and be long-term. As you saw, we continue to make big investments in Quebec. This last year, well over $2.5 billion. And we'll continue to do that because that's where the energy is. That's where the talent is. And I think we have to kind of look through the tariff stuff.
Okay, so when you're looking at the hospitality of Canada to foreign capital, obviously there's a factor that we happen to be blessed with minerals and we happen to be blessed with energy. So that puts a bias in favor of Canada. If you were in your old life as a consultant, what would you be saying to the receptivity to business investment? I see some statistics that were OECD, we're 35th out of 37 countries in our receptivity. So how's that looking to you when you take off your Rio Tinto hat?
Yeah, I think we've got a long way to go. We're nowhere near what we could be doing. And if you remember from the Growth Council, one of the key factors was dramatically increasing foreign direct investment. That was the establishment of Invest Canada, right, to move that forward. But if you look at what Singapore does, little Singapore with their Economic Development Board, they're just in a different division. We're in the 5th division. They're in the Premier League. They are very aggressive about doing that. And we need foreign direct investment. And there's a big opportunity. I found right now the government's being very supportive of that, but we could do way more. If I think about all the sectors, the technology, agriculture, we've talked about this in the past too, infrastructure, but we've got to be proactive. The other thing I just say, look at Emmanuel Macron right now. He is the chief salesman for France. Everywhere he's going, he's pushing Mistral, their AI business in the Middle East. He's selling Airbuses all the way through his Asian tour. We've got to do that type of stuff, I think. And it's selling, but it's also attracting. And I think that's a very significant opportunity because we're a safe rule of law that people like to do business. Rob can get into the tax side because I think there's a lot we can probably do there to make it better. But we're punching way below our weight on attracting the foreign direct investment that we actually need and can have. And it's not just the investment, it's the companies coming in to build things and do manufacturing and so forth.
Well, Rob, let's move to the tax side for a few minutes here. The new government has said it wants to review business taxation and, in light of the need for improved productivity, investment, can tax changes make a material difference in increasing business investment levels, do you think?
Yeah, I think that they can, and they can make a meaningful investment or a meaningful difference. I think one of the challenges that governments of all stripes face is having a relatively short-term view of taxation. Folks will often go for the political headline. We've seen a number of Canadian policies that do that. We also see that in other countries. I think that the real opportunity here is to be similar to what, again, if we go back in history, to what Canada did in the late 90s, something called the Technical Committee on Business Taxation. And really what that was is it was a very comprehensive report, panel of experts, but it really charted a course for Canada to make meaningful changes in business taxation that was really done over the next decade by both the then Liberal government and then the Conservative government. Things like reducing the corporate taxes from about 43% down to 27%. So I think that when I look at the opportunity in the context of the tax review that is in the Liberal Party's platform, and I think some of the opportunities here, it's really to take a longer term view on how do you do things over time. Because what I think you find that folks are looking at is that, to Dominic's point, there's the stability aspect, but there's also the certainty over time. So if you know that, for example, your corporate tax rate is going down over the next 5 years, you'll actually make investment decisions where it's going to be in 5 years from now, not where it is today, as long as you've got the confidence that the rate will be there when the profits are eventually realized. So I think that having that kind of long-term view, frankly, you'd have to have multiple parties kind of support that and general consensus. That can be very positive for Canada.
When you talk about the Technical Committee on Business Taxation, a name that was obviously chosen so as not to attract incoming political fire, a lot of people talk about the Carter Commission, which is 5 decades ago, which was really root and branch tax reform. Are you suggesting that there's a better way to go than that comprehensive type of reform?
Yeah, I think when you look at tax reform in Canada, and it's interesting because many people are calling for tax reform in Canada. And most people, to your point, go back to Carter in the 60s. The problem with Carter, frankly, is that it took too long. And I don't think that we've got another 5 or 7 years to study it in a lot of detail. The technical committee was originally supposed to be 9 months. They did it in about 18. They got a bit of an extension. But if I look at the tax reforms that Canada has done, yes, there was the big changes in the 60s that led to the introduction of capital gains. We also had meaningful tax reform in the late 80s that ultimately tried to simplify the personal tax system and led to the introduction of the GST. We had significant corporate tax changes in the late 90s that were kind of done, implemented over the next decade. I'd say arguably we've had a series of smaller mini tax reforms on a subject by subject basis really over the past 15 or 20 years. So I think that the challenge we've seen with addressing tax reform on a subject by subject basis is we can look at the experience of the Trudeau government with the small business changes, and very hard to get meaningful traction when you're focused on a single group. And so I think that the lesson is that if you're going to undertake meaningful tax reform, you need to do it relatively quickly. So within a year or two to kind of study it, make sure you've got experts involved in terms of looking at that. And also make sure that when you're making changes, there's enough, I use the term kind of winners and losers. We talk about how do you broaden the base. Taxes would have to go up for some groups. The benefit is that you try to reduce the taxes on areas that are going to have a better impact in terms of capital investment, productivity growth. But if you do it on a one-off basis, the history is that you tend not to have a lot of success.
So Dominic, when you were chairing the Growth Council, it had a lot to say about taxation, how that fits into the puzzle. Can you tell us if what you had to say then got acted upon, I suppose, and if you can see the opportunity to get going in a climate where people are more open to a leapfrog?
Yeah, so on the Growth Council, we believe the tax was a big lever. We were keen actually on doing a comprehensive review, as was done in the 1990s, but there wasn't a lot of appetite for that in that government. But what there was an appetite for focusing on the intangibles, and particularly in terms of innovation. And we felt, for example, that in the current tax system, manufacturing companies were taxed at an effective rate of 8%, roughly 1/3 of the rate that was applied to information and communications technology. There were differences. And so we wanted to have tax programs that supported innovation. We wanted to ensure that tax programs supported investment in things like software, lower taxes for income derived on licensing new software, as Quebec and BC did in 2010, ensuring multinationals are taxed fairly. So there was a range of things focused at that intangibles area because we thought that was the future. And we didn't think that we were keeping up with that and should push aggressively into that.
Yeah, and I think you talked about the intangibles economy as well as the tangible economy. And Rob, I wonder, one of the things that people hear about and probably don't really know what it means is patent boxes was one example. So I think that was even in a Liberal platform. Maybe you could walk us through a patent box, tell us if it's a good idea and what other good ideas are out there.
So a patent box has been studied by Canada for the past number of years. The Department of Finance had some consultations. In the fall economic statement, the Liberal government committed to introducing a patent box. But a patent box, in short, is the idea where the income that is earned from the commercialization of like intellectual property is subject to a reduced rate of corporate taxation. And it's been used in certain other countries like across the world, the UK being one of the examples, but there are like others. And the concept is that by encouraging companies to maintain their intellectual property within Canada, not only is there the commercialization of that and the monetization of that, but there's also typically a support system around that. And so that's one of the concepts. I think more broadly on different like opportunities for innovation, we've seen some tax incentives to encourage faster deduction of productivity enhancing areas, computers being one, costs on patents being the other. Those were introduced last year. There's proposals in the Liberal Party platform to essentially expand flow through share treatment to certain startup businesses to try to get more capital into that. There's proposals for a tax credit to help encourage small businesses invest in like AI. And then perhaps the larger one would be there were some enhancements made to the Canadian R&D tax credit program that were announced back in the fall economic statement with, again, they should be kind of put in place later this year. So there have been a series of measures, and I think that we're all waiting to see what those details look like, and we hopefully will see those later this year.
Discussions of intangibles and patent boxes and IP, these are relevant to companies that move goods as well, right? I think if I remember correctly, you guys have R&D facility in Montreal.
We do. We actually have our chief scientist is based in Montreal. It's the center for a lot of our rare earths capabilities that we have. ELYSIS, which is a way to produce aluminum in a low carbon way, which is an innovation, is based there. So there's actually a lot of R&D in that. And so if I think about Rio Tinto, you may not look at it that way, but I like to think of ourselves more like a pharma company. There is a R&D that is done because we have to develop the materials that matter for the future. And we work a lot with other groups, universities in Canada, with startups in Canada and other parts of the world. And I think there could be more incentives on that. We'd like to invest more in it. We are, but it's cranking up. It's very the amount we're spending on innovation today is about 10 times more what it was 5 years ago.
You both also mentioned in passing talent. And of course, this country needs financial capital to get into, to build projects. It also needs human capital and more human capital. And there's been issues around that. Maybe you can each talk to me about the tax system and the question of talent and competitive advantage for Canada as being part of the equation.
Yeah, I think, attracting talent is critical, especially in this intangible world. That's going to be critical to competitive advantage. And we need to have tax rates that are attractive to people. So I think it's actually a very big factor about where people are actually living and where they're based to be able to bring people in. And more a bit to Rob's point about the long term. If there's a feeling that this is going to somehow change significantly, that's going to be an effect. I'll just give you the case in the UK right now where tax rates are moving up in a time when you want to attract more talent. The non-dom program is being disbanded, and it's not the way you're going to be able to attract the talent that you need to be able to develop and commercialize all of the opportunities. So I think is a very important part of what we do, and we have to look across the border in Canada in particular. On that side.
So if we want to attract those kinds of people, Robin, I should say non-dom means non-domiciled. They're not domiciled permanently in the UK and has nothing to do with your first name. Rob, what would you say we need to do or should be doing on the personal tax side in order to up our talent quotient, or is just being a good place to live and enough?
So it's a really good question, because I think that the typical answer is to say, well, we need a very low tax rate and we need it to be as low as possible. But I actually think that this, kind of to Dominic's point, you really need to look at the comparison and say, we really need to be in the ballpark, especially for Canada, where there's a lot of really positive things we have. We have very strong social safety nets. We have a number of other programs. There's programs that kind of fundamentally help the less fortunate to have a better kind of fabric of society. And so I think that we need to have tax rates that are in the right ballpark and that are competitive, but they don't actually need to be the very lowest, but they do need to be competitive. And I think that it's more than just the headline personal tax rate. And right now in Canada, the top marginal rate would be about 54%, depending on the province. And many people would say that there's a psychological barrier at kind of 50%. So I think getting it on the wrong side of 50%, perhaps on the right side of 50%, would be helpful. But I think there's more specific tangibles as well. So there's things like we've made changes to stock option taxation, we still have incentives for some companies, but not for all. We've also introduced like additional taxes that are often paid by those that have like higher incomes. So specifically, we've got a series of essentially like extra taxes on second properties. They're in many provinces in a number of cities. And these are often on Canadians that are just not from the same province. So we have a number of those that are introduced, and those are like irritants for many folks. So yeah, I think that by and large, tax rates should be lower, but they don't need to be as low as some people would believe. I think that there's some specific changes that could be made. But I think ultimately we should really be quite proud of the broad social programs that we have. I know that it's a very Canadian thing to complain about the healthcare system, but I think that we've got very positive things there. The education system is very positive. The things that we're doing for universities, and even if you just look at the cost of folks going to university here versus in like other countries, like there's a lot of very positive things that when you look at the overall package, I think Canada fares quite well. However, what's that long-term outlook? Do you have confidence in it? And I think that there's a couple of tweaks that kind of should be made as well.
That brings me to, what I think is an important point. And Dominic, I'll quote you back to yourself for a moment. You told a story recently in a speech about a Chinese official saying that they would like to buy more from Canada, but while Canada has everything, it can't build anything. And I just wonder if one of the things that needs to be done is to have some policies that send strong messages that Canada does want your capital, does want you to come live here, work here, et cetera, and what those might look like.
Yeah, back to your leapfrog, which I really like. I do think being bold in these times of change is important, not kind of trying to minimize I think this is a time to really go for it. And I think our lack of ability to build infrastructure is embarrassing. And that gets to it's our pipelines, it's our port infrastructure, making sure that we have the energy assets that are required to be able to fuel the things that we're doing. Like, for example, what we're doing in Quebec on the hydro dam, there's huge opportunities on that front, which people like Michael Sabia and others are driving. But we've got to scale it because people just don't believe we really can do it or want to do it. And so I think having some demonstration projects, and we've talked a lot about tax. It makes a lot of sense to me too. I think there's also the deregulation side of it. Part of it, the Growth Council, one of the core recommendations was the cutting the red tape initiative, if you will, because we take a long time to be able to permit things, to be able to get things to even be done. And time costs money, huge amount. It's net present value. And there's got to be some consequence to that. So I think investors will look dubiously at us as to whether we can actually build some things at scale in the speed and time that we need to. So having some demonstration and commitment. I think the government is saying that now. All the words are there, but we got to deliver it. That's key.
Well, yeah, building faster is obviously a theme of the government. And that's a message in itself overseas. But Rob, if you looked at the taxation system itself and you wanted to send a strong message overseas to investors that they would sit up and take notice, what do you think that would be?
So I think that you need something bold. The term jolt was used earlier. I think you want to send a really strong signal that we are open for business. And then you've got to be able to deliver it with all the details behind it. But the single thing that I would do is I would take our corporate tax rate, which right now is about 27%, again, depending on the province. And I think it should go down to the high teens, 18, 19. It's got to be above kind of 15%. That's kind of this global minimum. There's a kind of broader regime like around that, but I'd get it to like 18 or 19. And clearly that's going to require investments from both the provinces and the federal government. The federal tax is about 15. Provinces make the difference, but I'd have a headline rate that starts with 1. And I think that would send a really strong message that we're open for business. I think you'd follow that up with a series of kind of technical changes that would make it easier to get capital into the country, easier to encourage investment. And then to Dominic's point, really ensuring that capital can be deployed very quickly, very effectively. And I think ultimately that will have not only a big impact on foreign direct investment, but also create a lot of jobs and spin-off effect within Canada. And oftentimes, frankly, that is in rural areas, which if you're looking at really the fabric of the country, many of our metros get all the attention, but these big infrastructure projects will have a big impact in rural parts of the country, which is really important from kind of keeping the country together and making sure that we've got strong economies and communities right across the country.
Okay, so a corporate tax in the teens would be one of the more attractive corporate taxes. We're kind of middle of the pack there. Whereas we trail badly on regulation. We're kind of just middle of the pack there. So I guess that would be bold. Does that seem bold to you, Dominic?
Very much. I like that a lot. And I think, again, similarly bold on this deregulation, speed permitting sort of thing. I find it interesting that it's countries like Rwanda that are make this a feature, if you will, of the speed with which you can get things approved. And again, I know countries are different and we all have challenges, but there's got to be some metric around that speed of build, because that will make it more attractive for people to be able to do it. And I believe there are ways to do that in a ESG friendly way. It's not kind of bulldozing people's homes, if you will. I think it can be done. And it's going to be a source of competitive advantage. Australia is thinking about this. The United States is really moving on this right now. So that we need a metric equivalent to what Rob's saying about the corporate tax in the high teens. What is our metabolic rate of building infrastructure? We should rank ourselves on that and aspire to be top.
As we're coming to the end here, I'm thinking of, I think it's one of your favorite questions, Dominic, if I remember correctly from previous writing. What would you teach your younger self if you could do it all over again? And maybe that's a good question for government to take 9-10 years after the Growth Council. What would it do over again?
I think it's be bolder. This is all about being very bold, because what I feel is a lot of the pieces of the jigsaw are there. There's a Invest Canada, there's a Canada Infrastructure Bank. There were a lot of the clusters, but we've got to be ambitious at a very different rate than we are now. So it's kind of like, what's good enough? It's great to have the tick box that you've actually done it. That's good. But I think we just have to be way more ambitious in this kind of world we're in. It's the leap. We need to put that leapfrog on steroids, or whatever the phrase is. We've got to juice it, because time costs us.
I think after that leapfrog being a boiling frog for so long, steroids might be appropriate in any case. So I thank you for your medical suggestion as well. I want to thank you both for this conversation. It's illuminating, it's forward-looking, and Rob will be back with us in a moment to debrief. But Dominic, I want to thank you for your time and, as always, your thoughtfulness on these matters.
No, thank you. Thanks for having me. And Rob, good to hear you.
Okay, we're back with Rob Jeffery, Deloitte partner. He's already told us that the 1990s kind of reform is a good reform to have, and we've talked about what would be some bold measures. Rob, what are, listening to Dominic also, who, has to make investment decisions as chair of Rio Tinto, what kind of takeaways do you have there that might be applicable for Canada for policy at this moment?
I really took two broad things away from our discussion. The first is it's actually quite optimistic to hear that, yes, tax is a part of it, but there's broader pieces around deregulation. But the Canada is very much, there's so much opportunity here, I think. And that's quite That's quite positive when I hear people talking about that.
Yeah, I guess one of the things I keep worrying about, thinking about, is for the last number of years, I've heard people say that when they go overseas, when they talk to companies that are already invested in Canada, they're very hesitant to continue investing. And now, our policy is based on that. We need to have alternatives. We need to have new markets. We need to have a stronger domestic economy. And so it has to be attractive. And the regulatory barriers are obviously a very important piece. Talent is something that might work in our favor. There's both sides of the equation. And the tax system, I wonder if it's really more like messenger DNA.
I think a lot of investment decisions, there's clearly a quantitative aspect. There's a lot of research that goes into the piece, but it comes down to something that Dom was talking about, where it's about stability, it's about outlook, it's about confidence. And I think that you really need to make sure that as a country, we're able to show a successful track record of that to encourage further confidence, further investment. And I think that whether it's major capital projects, we've seen things in the energy sector, we've seen tax changes. I think that we haven't always been going in the right direction or have that track record to back up that confidence. And I think that if we can have some tangible examples of success and tangible things, I think that will hopefully encourage further investment and really help kind of bolsters Canada's reputation, not only as a great place to live, but as a great place to invest and for folks to be able to grow their businesses as well.
Of course, it still has to be a fair place. And the tax system has a lot of scrutiny. And if people are seen, or businesses are seen to be getting an easier ride, I guess that will be a problem. So that has to be managed as well, right?
It's interesting that you mentioned fairness, because even in the framework of the Liberal Party's platform, when they talk about the corporate tax review, they do use the term fairness, and fairness is a really, really an important part of that. I mean, there's so many statistics you can use to kind of look at that, but I think that Canadians should be proud that we have a very progressive tax system. Some might say it's a little too progressive, which is harming growth, but it is a very progressive tax system. We have a lot of, even on things like the GST, we've got rebates that we're providing to those that they do not have the income to support that. And so we've got a number of measures that make that tax system fairness, but you're absolutely right. And it comes back to something that I said earlier. We can talk about tax in terms of rates and numbers, but fundamentally, taxes are really used to fund the public goods that we all enjoy and that we use to make the country a better place. It's funny, it comes back to something, I was chatting with my 7-year-old daughter and saying a lot, we're talking about tax. And she said, well, tax is important because it builds important things like schools and hospitals. And I think that whenever we think about tax policy, we can never forget what the funds are used for, and thinking about the use of those dollars and also how we kind of generate that revenue from a fairness perspective as well. So it's a very important point that we can't overlook. It's not just about dollars and cents and the numbers. It's really a reflection of the kind of society that we want.
Okay, so I've learned a lot today. I've learned a lot about taxation. I've learned a lot about competitiveness. I've learned what tax leaders speak to their children about. So that's very insightful. Thank you for that. Rob, big thanks for being with us today and, working with Dominic to help connect the dots between policy, productivity, global competitiveness, the opportunity that Canada has in front of it. So I appreciate it.
This was great. Thanks so much.
And thank you, our audience, for being with us today. And since you have listened this far, I'm going to assume you found this edition of the Leapfrog series useful. If so, please spread the word. Like it, recommend it, send it to your connections, your friends, your followers, your coworkers, your 7-year-old daughters. Let's get together again in 2 weeks on Full Circle, the Leapfrog series. I'm Edward Greenspon.